The Federal Reserve widely expected to cut rates again tomorrow, but would their best move be no move at all?
Our Fox panel is here now to discuss it, including Pat Powell from Powell Financial, Wayne Rogers from Wayne Rogers & Company, Charles Payne of WStreet.com, and Victoria Barrett from Forbes. Good to have all of you. I'm going to start with Wayne. And let's begin first. Oh, aside from the fact that we also have Peter Schiff, I wanted to mention. Peter Schiff, author of Crash Proof. This is a huge panel that is growing as we speak. Wayne, you get first crack at this one. We already saw a three-quarter-point cut just a week ago today. Do you think there should be any cut at all tomorrow?
No, I have this same feeling that I think somewhat that David, there's too much fiddling with this thing. In other words, Greenspan brought a lot of this on by, fine-tuning down to 1%. And now we're trying to fine-tune again. I don't understand all of that. This fiddling with the interest rates so much, so quickly, is not going to cure something right away. It has a long-term effect, 6 to 9 months out, and I just don't see that happening anytime soon. And also, they're overdoing it. They're constantly got their hands on the dial. They ought to let it go. The economy can take care of itself in many cases.
Well, and Peter Schiff, I asked David Malpass, I'll ask you, if the Fed does cut rates, even just a quarter of a point, are they actually bailing out Wall Street when the folks out in the street are going to have to pay in terms of the diminishing of the value of their dollar?
Well, of course. I mean, everybody's going to pay. They're trying to bail out their own political careers. All they can see is as far as the next election. If they really cared about the long-term health of this economy, they wouldn't be looking for these short-term stimulus gimmicks. The Fed should be raising interest rates, not cutting them, not standing back. They need to be several hundred basis points higher than they are right now. And the Fed, we need to be embracing this recession, not resisting it. We need to purge our economy from these imbalances. We need to go back to a viable economy. The longer we do this, the digger the hole we're digging for ourselves.
Well, Charles, I can see, just wants to embrace the recession way, right?
And to Peter's point, I do believe a year from now rates will be higher. I think we'll be at 4.5, maybe, so. But right now, I think they're doing the right thing. And Wayne says that the Greenspan fiddled around with it to 1%. The mistake he made was he left it there too long. It was there for a whole year. The good thing right now is Ben Bernanke is really intelligent. I don't know that even I or anyone has given him enough credit. I think we may look back from now and say this guy was a genius. He was maybe he was the maestro. Because, you can always raise rates. If they've overshot, which the Fed usually does, they have a chance to adjust it. But I think right now, considering the pressure that they're under and the credibility factor, they have to cut 50
Pat, is he too clever by half? That is, with all this fiddling, does that give a signal that perhaps the Fed doesn't know exactly what it's doing?
You're right. I mean, Charles may be right, but I think the more likely scenario is that he is over-fiddling. I think this is welfare for Wall Street. And I think I'm very concerned about us going so far. The 3/4 of a point was way overblown last week. There was no call for it.
Was it because of that French bank, by the way?
It might be. The French bank might have contributed to it. There was some meltdown around the world, but nothing like the 87 crash. And the 87 crash, Greenspan lowered rates 60 basis points. 3/4 of a point was totally unnecessary. I'm very concerned about where this is going. We're using up all of our ammunition, and we're not in recession.
Victoria Barrett, Adam Shapiro from Washington was saying that we got to watch and see what some of these Federal Reserve bigwigs are going to say, particularly Charles Plosser, who is the inflation hawk.
Right.
You talk to anybody,
right.
They see these prices going higher in every single store into which they go. What do you think about inflation?
Yeah, that's a real problem. People are starting to notice. We all have a sense that it's happening, and the Fed looks like it's oblivious to that. Now, they'll probably come out and say that they aren't oblivious to that, but the fact is the last week's cut looked like they were responding to the stock market, not being proactive about what's going to happen in our economy looking forward. Look, what we have to realize here, it's easy to criticize them, but what they're trying to do is thwart a potentially dangerous feedback cycle where you have weakness in the credit market. That leads businesses to get really conservative, not spend, potentially lay off workers. Higher unemployment means lower consumer spending. That would lead to more unemployment. There's a potential for this credit cycle to bubble over into the rest of the economy. And if low interest rates would stop that from happening, that would be a good thing.
Wayne, really quickly, the Fed has two mandates. One is to keep the value of the dollar, and two is to make sure that not too many people are unemployed. Should it only have one, maintaining the value of the dollar?
No, those two things are okay. What it shouldn't be doing is trying to correct an economic problem by jiggling interest rates. Interest rates are not going to do it. This problem was caused by the housing meltdown. That was caused by all of the derivatives. That is a fundamental change in the way that assets are valued. It has nothing to do with the interest rate. So the Fed is just jiggling something here that is not really going to have an effect.
Okay, we'll hear a lot more from our gang in just a minute, but let's get...
If you talk to 51 economists and ask them all whether we are headed for a recession, you think you would have a pretty good picture of our country's financial future?
Yeah, right.
51 of them?
Well, guess again. It turns out you do just as well flipping a coin. According to USA Today, the experts are split about 50-50 on what will happen. Now, does this mean they're all just guessing? Our Fox panel is back now to talk about it. Peter, let me go to you first. Do economists know what they're talking about? I mean, frankly, you get 50 economists, you get 50 opinions.
Well, it doesn't mean they're guessing. It means they're blind. I mean, we're already in a recession. We've been in one for a while. It's going to last for years. You know, the only problem is the way we're measuring it. You know, if you want to know why the economy is such a big issue in this election, it's because the voters live in reality. They're experiencing recession. They don't live in a fantasy world of government statistics.
I got to tell you something, Charles. I was in California, and a person in a retail store told me that exact thing. He said, the government's trying to tell us we're not suffering, and we are. Now, I don't know if the writer's strike is playing into the feeling up there, but you know, you have a lot of people who are suffering, but it hasn't exactly been termed a recession.
It has not, you know, but to a certain degree, can you think of a time when people didn't, you know, complain about the economy? I mean, even listen to popular music going back 100 years ago. People always complain that we're in a recession, that the economy is bad. There's always a pocket of the society that does that. But the reality is, if you look at the facts as they are, you know, I mean, you know, you can debate whether with computing them properly or not, but the bottom line is, you know, there are no real signs that we're in a recession right now. Also, you know, I look at earnings this week. Look at, for instance, the rail companies. How can the rails be posting these type of numbers in a recession? There's a company called Trinity Industries. They make rail cars. They have their second largest backlog in history. Are companies just backlogging rail cars because we're going in a recession?
But Pat, the whole point of the stimulus package is predicated on the assumption that we are at least going into hard times. We got an email from Herb from Sacramento, California, saying if Chris Van Hollen, that congressman we just had on, represents a level of economic smarts in the committee, we're really in trouble. Many of the smartest economists didn't see the problem coming either.
Well, Herb's right. But I think also we're contributing to it with things like, you know, an emergency Fed meeting. You know, we're going to lower rates by quarters of a point. It's not a recession. I don't care what Peter says. It's not a recession. The numbers don't show it yet, but it feels like a recession.
But the numbers are wrong.
Well, Peter, I live in the world where the numbers are the numbers that the Fed gives us. I don't live in Peter numbers.
The government is giving us phony numbers
here. I think you have to stay with the fact that the numbers show what they like a recession.
No, I don't have to. You don't have to accept that.
I understand, Peter.
When it's blindly false.
Listen, anybody can tweak any kind of statistic. Is Wayne with us? Can I go to Wayne?
Yes, Wayne is here.
So when you hear this kind of discussion, you know, we've got all of these economists and 50-50. I mean, does anybody really know?
First of all, you know, an economist is a guy who drives forward by looking in a rearview mirror. You can't expect the economist to know what the hell they're talking about. You're going to get a 50-50. You're going to get opinions all over the place. A recession is technically defined as 2 quarters back-to-back of GNP decline. We haven't had that yet. You can have all the feel-good talk you want about, oh, this is bad. Oh, you know, I'm paying too much here. Oh, our coffee's going up, or petroleum's going up, or whatever it is. We're not in a quote-unquote recession. We don't know what a real recession is. You got to go back a few years to find that.
Well,
so we're not nearly there. Wait, let me finish. We're not nearly there, and this constant tinkering to try to correct something that isn't there is going to get you in more trouble, because that's what got us here in the first place.
We're going to hear from you next. I promise we're going to you first. We've run out of time for this little debate, but we got a lot more little debates coming.
David, the industrials are moving higher.
So right here, but first, worse than expected earnings from Countrywide
today. Does that
today.
surprise anybody? The company at the center of the mortgage mess, ground zero of the foreclosure world, reports losses of 79 cents per share. That's actually more than double the estimate. In spite of the losses, Bank of America's CEO Ken Lewis says everything's still a go for his company to buy out Countrywide. Is that smart or stupid?
Our Fox panel is now back to talk about it. Pat, it certainly is contrary to logic.
Yeah. You know what is really amazing to me? We keep saying, you know, they were worse than the estimates. we should start questioning these estimates. Have we noticed that financial company after financial company after financial company has missed the estimates by huge amounts? There are very few good analysts. We got to really look at how these estimates are being done.
Victoria, Countrywide's got the so-called real estate in the mortgage market. They were the nation's largest lender.
Right.
So is Bank of America actually going to look pretty smart having picked it up on the cheap?
Well, yeah, they could pick it up on the cheap. The interesting thing to point out is that the stock market investors in Countrywide are certainly skeptical that this deal is going to go through. There's about a 20% spread between Countrywide's current stock price and the value of the deal that Bank of America put out a month ago. So that suggests that the deal didn't price in all this negativity that we now see has come about because the housing prices is worse than Countrywide thought it would be.
And Victoria, I have to apologize. I said I was going to go to you first. I love Pat, but I went back
okay.
on my word. You know I would have done that anyway. All right, Charles, what about this? Is Countrywide still a bargain?
Yeah, I think it is. Ken Lewis, he could have waited, but he could also have waited for the company to slip into bankruptcy, and it probably would have become a much more complex issue. Some folks say perhaps this has a lot to do with ego, because let's not forget, and when they put the $2 billion in at $18, a lot of people said this guy's a genius, and he went from being a genius to a goat pretty quickly. But I don't think he's doing the deal just to save his hide. I really do believe there's a business fit here. Yes, he probably could have gotten it a little bit cheaper. It could have been a more complicated deal. There could have been other buyers if this stock had slipped into bankruptcy. So I think all in all, a few years from now, he'll look brilliant.
Peter, will he look brilliant, or will he look like a guy who really hurt Bank of America, picking up on the so-called on the cheap? But what is he picking up? A company that was really at the center of the major problems.
Yeah, I think it's the latter, Liz. I think there's a lot more liabilities in Countrywide than assets. I think the company has a negative value, so he's overpaying. I think if I was a Countrywide shareholder, I would be rooting for this to go through. If I was a Bank of America shareholder, I would be rooting against it. In fact, I would be particularly annoyed at the fact that Countrywide just announced a 15-cent dividend to their current shareholders. I mean, that money should go to Bank of America. How can they let this company pay out dividends on huge losses?
Well, that's a great point. But, Wayne, clearly Bank of America has had a chance to pore over those books. Now, I know a lot of people have been poring over books and not finding things they should have found in the past year. But has the learning curve kicked in? Are those analysts prepared to spot those little problems like subprime exposure?
I don't think analysts are, I don't have a high regard for analysts in the first place, so whether or not they're going to spot it or not is beyond me. But Lewis is a very cogent guy, and he knows what he's doing. The price may get it. He's going to buy it. That's a done deal. Whether it's done at this price or the price gets adjusted, that's another question. But he's going to buy it because it is a great fit, and at some point in the future it will pay off. But he may be paying up for it in the meantime.
Paying up for it in the meantime, Pat?
Yeah, I think so. And I would like to say that ultimately, we're still going to borrow money. And this is a franchise. And this may be a really great fit in the long haul because of the franchise. People are going right now, they're refinancing. If you have good credit, you can go out there today and you can refinance yourself and get interest rates on a 30-year mortgage in the 5% right now.
Well, that's manna from heaven at this point.
It absolutely is. It helps the consumer, but somebody's also
Countrywide, Bank of America is going to supposedly, last I heard, keep the Countrywide name.
Right, and they
that
should.
means that they don't feel that it's a terminal. It's not a horrible
I don't think it
name
is.
to be
I think
associated
Countrywide's
with.
done a lot of things right in here. They're renegotiating
it's
their
not
mortgages.
The name, it's the liability.
Last year they did 83,000 mortgages they renegotiated. They're actually proactive. They're calling people who have subprime loans and saying, are you in trouble? Let's talk. They're trying to make this work. Some of these other bankers are kind of brain dead when it comes to this stuff.
But Victoria, there are two things that Peter mentioned, actually. I've got to give him credit. The liability of the company itself and the fact they're giving out a dividend. Does that make sense in this environment?
Yeah, I don't understand that dividend move at all. Given what dire straits their market is in, what dire straits their balance sheet and income statements are in, I don't know why they would give out a dividend right now, except to appease shareholders to keep them in for the short term until BofA does the deal. It's odd.
Why do they have to keep them in? They're just enriching themselves. Maybe they have some shares and they're paying themselves something before Bank of America.
Well, they sold a lot of shares.
The
They got out.
Yeah, they did sell a lot of shares, and of course, Mazzullo's the poster boy for this whole thing. But I think it's wise to keep the name as well. They've been around since 1969. A lot of people have bought their homes through these guys for the last 3-4 decades.
That's
and this
the problem.
too will pass.
Well,
a lot of those
not
people are
all-
going to be
not all
suing, and a lot of
4
those loans
decades.
are problem loans.
Yeah, but you know what? Well, what do you think, David? I mean, and feel free, Wayne, to jump in here. But if there are lawsuits, at some point, isn't a good defense attorney going to say, yeah, but you signed on the dotted line, and here it says granted fine print, but here it says exactly what you were getting?
Well, there are going to be lawsuits. There are always going to be lawsuits. You know that. But, you just have to deal with that. That's going to come out of every deal.
Right.
Sooner or later, somebody is going to be disappointed. Somebody is going to sue. Somebody's saying somebody's getting too much out of it.
But you don't know. The
a lot of
lawsuits
it
are
also
going to come.
depends what the folks inside Washington decide.
But the lawsuits are going to
Depending on
come.
who's in the White House, and maybe if the Democrats are in and you get a different type of attorney general. But $1.5 trillion in serviceable loans, that looks attractive to a lot of
No,
vets.
the lawsuits are going to come from all sides, though. They're going to come from the people who borrowed the money. They're going to come from the people who bought the loans.
You may well be right, Peter. We got to leave it at that. How low will the Fed?
Moments from the close of trading at markets here in New York, and the markets are solidly higher.
Yeah, traders are expecting the Fed, which is meeting right now, to announce tomorrow another rate cut. But the question is, will it be enough? And I go to Pat Powell first from our board of contributors. Pat, the surprising thing is that the market is sort of downgrading their expectations. At first they thought it was a lock for a 0.5 percentage point. Now they're thinking, well, it might be a quarter, but the market is still up almost triple digits.
I think reality is setting in. We're getting close to the deadline. They're thinking back 3/4 of a point last week. Yeah. Why wouldn't he have done a point last week if he needed to do so much more?
So why is the market doing so well with those lower expectations?
Well, I think the stimulus package is a fait accompli. It's very we don't know the final outcome of how it's going to look, but we know that we're getting something. And you know that the Fed is going to be biased to continue to cut rates. Whatever they do today, or tomorrow rather, they're going to continue to cut rates. And they've shown that they'll have an emergency meeting. They don't have to wait 2 months for another meeting.
Wayne Rogers, when you wait, as we all will right here at 2:15 p.m. Eastern Time for that decision, if we get that quarter or half-point cut, what happens at the next meeting? Do you think they'll stand pat and wait to see these cuts that we've seen absorbed into the market to see how they affect things?
I think they have to. I don't know how in the world you do. As I said before earlier, I don't know how you keep rigging this thing on a day-to-day basis, week to week, month to month. It seems asinine to me. I mean, I don't know. The guy must have something in the back of his brain that tells him that he can see in the future like a clairvoyant or something. Maybe he should get a crystal ball, because I don't know any way that you can juggle around and fine-tune this thing so much to know that it's going to have a certain effect. Nobody knows. They do know that ultimately it will have some effect, but it's not going to have any effect on changing the values that have already been taken in the marketplace. Those are values that you can't change by changing interest rates.
Charles?
So what Wayne is saying essentially is the guy's taking an educated guess. But you know what? If you're going to have anyone take an educated guess, it should be someone who's a historian on this thing. And, I know he hasn't done it the way we wanted him to do it, but perhaps he's changing the role of the job. But earlier in the show, someone said that this was a rate cut for Wall Street. I disagree 100%. We see refinancings up over the last couple of weeks through the roof. This is a rate cut for all of America because guess what? It's not about helping the little guy without helping Wall Street. If you're going to help the system, you got to help the entire system. So that's why I happen to welcome the rate cuts.
Peter Schiff, I know how you feel about the stimulus package, but at some point, do you think it will help in any way, shape, or form get the economy back on solid footing?
No, not at all. It's a step in the wrong direction. In order to get the economy back on solid footing, we've got to stop doing what created this mess. We've got to encourage Americans to save a lot more and to spend a lot less. We've got to produce a lot more and consume less. What's going to do that is much higher interest rates, and we can't interfere with the market correcting asset prices that are too high. Real estate prices need to fall sharply. Stock prices are still too high. The longer the government tries to prop up these phony prices, the more damage we do to ourselves.
Well, Victoria, incentives matter, and the question is, do we have perverse incentives encouraging Americans to do the wrong thing, as Peter suggests?
Yeah, I think we do. The stimulus plan, while it is kind of a steroid shot in the arm for the economy, it doesn't fix the underlying problems that the American consumer is facing: high debt levels, no saving. It kind of continues this credit binge that we've been on, or at least the mentality of that. And it also sets a precedent that the government's going to bail you out when things get rough. And the fact is, American consumers, not everyone, but a lot of folks stretch themselves too thin. And you got to pay the consequences eventually. And this just kind of prolongs that inevitability.
But gang, we just heard from Dave Ramsey, and we have seen past stimulus packages that have created the same response, and that is that some people, a good chunk of them, pay down some of the debt in a weird kind of way. Is that going to be a really positive thing?
Yeah, actually it is, and there's actually a study on that. And when they pay down the debt, within a year, their credit cards are back where they were before they paid down the debt. All it does is delay the actual time that they are going to spend the money.
Even if they do that, we're just trading private debt for public debt. We're not helping ourselves. We're digging a different hole. And of course, if we do it through inflation, which is most likely, remember, there's only two ways to finance this stimulus package: borrow more money from the Chinese and the Saudis, or print the money. Either way, we're doing more harm than good.
Well, and Charles, they have all but admitted, I haven't seen one politician not admit that this is going to add to the deficit. But they say this is a price that's worth paying.
This is the price that's worth paying for winning the White House later on this year.
That's it.
I don't think we need this stimulus package, but when you have a president at 30% approval ratings and Congress at 25%, they both just look away and say, who can buy this thing? And that's exactly what's happening.
Wayne?
Well, I don't understand one other thing. You always talk about the consumer bailing us out. Why does the consumer have to be the one that bails us out? I don't understand that. I mean, you're right. You're just feeding somebody who's already greedy.
Two-thirds of the economy is based upon the consumer.
No, it's not.
Two-thirds of the economy is based upon the consumer. So
yeah, but you're
not just bailing them out.
Don't you understand what I'm saying? You're
going.
promoting consumption. You're constantly promoting consumption. I mean, this planet can only stand so much consumption,
No, you've got the cart before the horse.
We do go into a very nasty recession. If you take away two-thirds of the economy, you're going to go into a terrible recession.
We're going into a recession
You're not going to go into
anyway,
a recession. You can't stop it. These are people. You're feeding an addict. That's what you're doing.
Well, you're talking about the people on the fringe. There's an awful lot of people that manage their debt responsibly. The average credit card debt in this country is only $9,000. The average person is handling that credit card debt. It may not be what I would want to do, but they are handling
Charles,
it.
here's something that's going to add. Hold on a second, guys. Here's something that's going to add to the confusion and the problems that we're now facing with our economy. The FBI has just announced criminal inquiries into 14 companies as part of a wide-ranging investigation in the subprime mortgage mess. Now, as we get more information, we'll share that too. But this is hot off the press. Indicates that the lawsuits have begun. We've heard about them coming.
They're going to be here for a long, long time. But you know what? There's going to be a lot of finger pointing. The bottom line is a lot of people lied on their mortgage applications, and a lot of people who took those applications knew that those people were lying. Culpability goes all around. And that's another reason why we're getting this type of
the mortgage brokers.
Well, I don't know that they were encouraged to lie, but they lied anyway. The bottom line, though, Peter, is at some point, I know you would like to drop daisy cutters around the entire country and start from scratch, but at some point we need to try to see if we can fix this thing in a responsible way without totally decimating the country.
Go ahead, Peter.
I want to fix it, but remember, consumers don't drive an economy. Look, you've got plenty of consumers in sub-Saharan Africa, but they have poverty there. What drives an economy is production, it's entrepreneurs, it's business investment, it's saving. I mean, the consumption is what is the reward for all the hard work of producing.
Okay, here comes the clothing bell. Clothing. I'm thinking about retail.
She's going shopping, folks.